It looks like billions of dollars have been wiped from the Australian property market in the last quarter. Let's take a look at what's happening with property prices. And even with the declines that we're seeing, is it too hard for the everyday Aussie to break into the property market? Australian homes are worth a combined total of more than 9 trillion, but that number has fallen for the first time in 2 years. The ABS estimates the total value of residential dwellings in June quarter was 9.9 trillion, down 162 billion from 10.1 trillion in March. This was the first quarterly fall in the total value of residential dwellings recorded since June 2020. The average price of a home, including houses, apartments, and townhouses, was $921,500 in the June quarter of this year. That figure dropped by $18,900 from March, according to ABS data released on Tuesday. Now, sometimes I don't think that these articles are very helpful, telling people that the Australian property market's gone from 10.1 trillion to 9.9 trillion doesn't really have any bearing on me as an investor or a homeowner at the end of the day. The fact that they also provide data on houses, apartments, and townhouses, saying that the average price is $921,000. Again, this doesn't give a lot of insight because $921,000 is averaging across markets like Darwin, regional markets, Sydney, Melbourne, Adelaide, Brisbane, Perth, Hobart, Canberra, the list goes on. It's 921,000, which is the average of all properties across Australia. It's not necessarily an average of what's going on in Sydney, where the median's around that $1.5 to $1.6 million, or Melbourne, where you'd expect to pay $1 million for a home, or Brisbane, where you'd expect to pay around $750 for a nice home in a suburban area. The fact the media continues to talk about price declines and price booms, I guess, falls into the cyclical nature, but hopefully I can provide some value and some insight as to how I take this media speculation around what's happening in the property market and apply it to my situation as a property investor and a homeowner. My housing market chief economist Andrew Wilson said he wasn't surprised by the ABS figures in what remained a buyer's market. It's like a hangover after the party, and it's been a big party over the last couple of years. I think he's right there. Prospective buyers have been pulling back in recent months as the RBA introduces successive interest rate hikes to counter soaring inflation, pushing up mortgage rates as a result. The people who borrowed cheaply to purchase homes when the central bank set the cash rate at a historic low of 0.1% during the pandemic now face higher repayments. The RBA now has the cash rate at 2.35%. I feel really sorry for those people that bought at the peak of the property market, when those cash rates were around that 0.1% mark, and the RBA was saying, yep, we're going to hold this cash rate for a number of years, and so this is going to give stability to the Australian property market. This led too many people to dive into the market, and people who bought at the peak, especially if you're a homeowner buying at the peak and taking on all that debt, which in my opinion is bad debt, not good debt, because it doesn't bring you any income, that's where you can see mortgage stress and relationships break apart with finances and stress within that family's household. Now, the options for these people are to sell their house and take a loss at this point in time, as we've seen roughly a 5% pullback in property prices, or try and move out of their current home into a smaller dwelling that has less rent and rent out their current place of residence. This is where you need to carefully think about making an owner-occupied decision. Do you want to take on $500,000 worth of debt, or $1 million worth of debt, or $1.5 million worth of debt, and pay that on an owner-occupied residence? At the end of the day, yes, it's relatively affordable at around a 4 to 5% interest rate to get the home you want, but is it worth it for the stress and the financial burden that an owner-occupied residence brings? Whereas on the flip side, if you've used that money to bring in income and to buy an investment property, that's where I would see that as good debt, comparing that to your home as bad debt. Yes, people's homes go up in value and you can add value to that property. So if you're doing that strategy and you're adding value to the home and you're buying in a blue chip area that you think you're going to see appreciation over the long term, then it might make a good investment decision, but you need to be aware that it's not bringing you any cash flow. Whereas at least with an investment property purchase, you're getting the cash flow and you're potentially getting the capital growth in that location. Dr. Wilson also said we could see prices increase in the first quarter of next year, but there's a bit of water to go under the bridge before that happens, particularly around interest rates. And what he's alluding to there is the RBA reaching an outcome as to what's going to happen with interest rates and the Reserve Bank getting a handle on inflation. So we'll have to see how that plays out. Will interest rates keep rising, and for how much and for how long? That's going to have a bearing on the property market. The mean price of a home in New South Wales fell by $46,400 to $1.17 million, but the state was still home to the most expensive dwellings on average. The second highest median price of a home was in the ACT, followed by Victoria. The lowest mean price was the Northern Territory at $542,000. Despite the overall drop nationally, the mean price of a residential home actually increased in 4 areas. South Australia saw a rise of $23,500, followed by the Northern Territory of around $10,000, WA rose by $7,200, and Queensland also recorded a small increase of $1,000. Now, this is where location comes into play when these articles are talking about median price points. If you're looking to invest, then South Australia, Northern Territory, WA, and Queensland look like better prospects when you compare that to the ACT, Sydney, and the Melbourne markets. Or you can also look regionally. Emily and I look to buy in a regional location to go for both capital growth and cash flow. And that's why we purchased a unit block with 4 dwellings, a house, and 3 units on that site in Coffs Harbour. So regardless of what's happening with property prices today, whether we've seen $1 trillion or I think they said 165 billion come out of the market, whether we've seen the property market go from 10.1 trillion to 9.9 trillion, doesn't really affect you at the end of the day as an investor and a homeowner. You need to look at the suburb that you're buying in. You need to look at what's happening in that city, what's happening in terms of future infrastructure, is there limited land supply? Come back to the fundamentals. If the fundamentals stack up and you're happy with the deal and you're looking to buy and hold for the long term, and you've run your numbers, looked at your cash flow, looked at your potential capital growth, then I would go ahead with making that next property purchase. You need to take these articles with a grain of salt and put together your strategy and what fits your situation. If you're looking for help to develop your strategy or you just want to have a chat about buying property in the Brisbane market, I run a buyer's agency called Purpose Property. You can book in a Zoom call on my website at purposeproperty.com.au. We'll have a chat about your situation, what your short and long-term goals are, and what we do exactly as buyer's agents here in the Brisbane market. Also, let me know in the comments down below what you think is going to happen with property prices over the next few years. Drop a like on this video, subscribe to the channel down below, and click this video over here for more things real estate, renovating, and financial freedom. I'll see you in the next one. Peace.